About a month ago, I woke up on a Thursday morning, September 18th to be exact, opened up my Bloomberg app, and I was genuinely surprised to see this news. Breaking. Nvidia to take $5 billion worth of stake in Intel. I was like, wait, what? Nvidia buying into Intel? The same Intel that's been getting absolutely demolished by AMD for the past 5 years? The same Intel that's basically the Blockbuster of chip companies at this point? And then, because apparently we're just throwing around monopoly money now, 3 days later, we got this. Nvidia to invest up to $100 billion with OpenAI to build AI data centers. $100 billion. At this point, these companies are just playing a game of who can say the biggest number without laughing. Next week, it'll be Microsoft commits $7 trillion to build AI that can finally fix Windows updates. Now, when I first saw that Nvidia was dropping $5 billion on Intel, I thought maybe it was just a strategic play to hedge against TSMC. You know, geopolitical risk, Taiwan tensions, all that stuff. And sure, that's part of it. But then I started to realize what Nvidia actually did here. They didn't just buy some manufacturing capacity. They also just bought their way into a $50 billion market that they had exactly 0% share in before. Let me explain. Right now, the x86 server CPU market is worth about $50 billion a year. Intel owns roughly 70% of it, AMD has most of the rest, and Nvidia, zero. But here's the genius move. This deal isn't about Nvidia making standard CPUs to compete with Intel or AMD. That would be stupid and they'd get crushed. Instead, they're creating custom x86 CPUs that are specifically optimized to work with Nvidia GPUs. Think about how data centers work right now. Companies buy CPUs from Intel or AMD, then they buy GPUs from Nvidia separately. These are two different purchases from two different companies, and these chips aren't designed to work together optimally. It's like buying your burger from McDonald's and your fries from Burger King. Inefficient as hell. There's latency, inefficiency, all kinds of bottlenecks. Here's what makes me want to take out a second mortgage and YOLO it all on NVDA calls. Don't actually do this. I'm an idiot. But imagine if Nvidia can sell you a complete package, a CPU-GPU combo where the CPU is literally designed from the ground up to work perfectly with their GPUs. The performance improvements alone could be 30 to 40%. That's massive. And instead of just selling a $30,000 H100 GPU, Nvidia can now sell you a complete integrated system at a much higher price. Their addressable market per server would just increase by 50%. Now, at a scale of millions of servers being deployed globally, that's hundreds of billions in additional revenue opportunity, and Nvidia doesn't even need to compete directly with Intel or AMD in the CPU market. They're creating an entirely new category, AI-optimized CPU-GPU packages. It's like when Apple made the iPhone. They didn't compete with Nokia and BlackBerry. They made something completely different. We all know how that turned out. Now, I need to say something that might sound contradictory, but stick with me here. I think that we are 100%, absolutely, undeniably in an AI bubble. But knowing we're in a bubble doesn't mean you should run for the exits. Some of the best trades in history came from riding bubbles to the absolute top or shorting them right before they pop. And there's no company better positioned to milk this insanity than Nvidia. Just look at numbers that these big tech giants are throwing around. OpenAI needs $300 billion here. Microsoft is dropping $120 billion there. Meta casually announces $600 billion like it's nothing. It's gotten to the point where 10 billion announcements don't even make headlines anymore. My thesis is that we should understand the mechanics of why this bubble will keep inflating for years and ride it with the companies that will benefit most until the music stops. Here's something most people don't realize, and this is why I'm saying we're in a bubble, but a bubble that will continue to grow for a long time. These AI data centers that are being built right now are depreciating assets. Not in book value terms, but in terms of actual competitive value. Why? Because Nvidia releases new chips every 18 to 24 months that are roughly 2.5x more powerful for the same price. This means the competitive value of older data centers basically depreciates 15 to 20% every year. Think about it like this. An AI data center has an average life cycle of about 7 years. Let's say Oracle just built a $20 billion data center today. In 5 years, it'll be worth less than my Robinhood portfolio. In 7 years, these data centers are basically expensive space heaters. The cost to run them exceeds the revenue they generate. You see what's happening here? It's like a treadmill. Once you're on, you can't get off. You have to keep upgrading just to stay competitive. And every step of that treadmill puts money in Nvidia's pocket. Let's say Amazon builds a new $30 billion data center. Microsoft builds a newer one with better chips that's 2.5x faster. Now Amazon's customers are jumping ship. What does Amazon do? There is nothing they can do. They have to upgrade. It's mutually assured destruction if you don't keep up. As this catch-up goes on, by 2032, we're going to have this massive wave of old data centers all hitting end of life all at the same time. But by then, we'll also have built 2027 and 2028 vintage data centers. Each generation being 2x more powerful than the last, will have so much compute capacity that prices will crash. And suddenly everyone will realize we built 5x more data centers than we actually needed, all just to beat each other in this AI arms race. That's when the music stops. That's when you'll see massive write-downs, all the usual end of bubble fireworks. But that's like 10 years away, maybe more. And that's why Nvidia is the ultimate bubble play, because we're looking at more than 10 years of them selling into this frenzy, 10 years of them selling shovels in the AI gold rush. McKinsey says the AI infrastructure race will cost $7 trillion over the next 5 years. But that's before the OpenAI deals, the Oracle partnership, Meta's $600 billion investments. We're probably looking at $5.2 trillion just for data center hardware. 70% of data center cost is GPUs. So that's $3.64 trillion in GPU spending. Nvidia has 94% market share in AI training GPUs. Even if they drop to 85% because, I don't know, AMD finally figures out how to make drivers that don't suck, that's still $3 trillion. Over 5 years, that's $600 billion in revenue per year. But even if you discount that number by 30% to account for my complete inability to predict anything correctly, you're still looking at $462 billion in annual revenue. Here's what makes this whole thing so fascinating from a game theory perspective. The hyperscalers, Amazon, Microsoft, Google, Meta, they all know this is probably a bubble. They're not stupid. But they also know they can't afford to be the one company that doesn't keep up. If they fall behind in AI infrastructure, they lose customers. If they lose customers, their stock price tanks. If their stock price tanks, so they're stuck in this prisoner's dilemma where the rational choice is to keep building even though collectively they might be overbuilding by 5x what's actually needed. And Nvidia is the only winner in this scenario. Whether the bubble pops in 2030 or 2035, whether we need all this infrastructure or only 20% of it, Nvidia gets paid either way. They don't own the data centers. They don't carry the debt. They just sold the shovels to everyone digging their own graves. So, can Nvidia really become a 10 trillion company? 6 months ago, I would have said, absolutely not. No way. That's absurd. But after seeing these deals, after running the numbers, after understanding the game theory dynamics of this AI arms race, Yeah, I think they can. As of this moment when I was writing this script, Nvidia is a $5 trillion company, so just 100% more to go, I guess. But here's what I've learned from studying bubbles. The trick isn't avoiding them or timing the exact top. The trick is riding them with the companies that profit from the bubble itself, not from the bubble's underlying premise. Nvidia doesn't need AI to change the world. They just need companies to believe it will and to spend accordingly. And based on everything we're seeing, the mega deals, the spending commitments, that belief isn't going away anytime soon. Look, I'm not saying mortgage your house and buy NVDA calls. I'm not a financial advisor. I'm just some guy on YouTube who draws pictures of option strategies and makes jokes about being broke. Do your own research before jumping the gun. See you in the next one.